the podcast with us today is Chris Roberts. Chris, welcome to the podcast.
Thank you, Dan. Appreciate the opportunity.
Well, Chris, I want you to get us started here and talk to us a little bit about yourself and your background, because we're getting ready to dive into this property that you acquired recently called Plantation Townhomes, which is 112 units out of Savannah, Georgia area. So give us a little bit of a peek about who you are and your background, and then we'll dive into this acquisition.
Sure. Thank you, Dan. I am a multifamily investor and syndicator. I'm the CEO and founder of Sterling Rhino Capital. I hold single family residence, duplexes. I've done some construction and lots of other stuff in between. But my latest and greatest that I'm really looking forward to diving into is the larger multifamily properties. I also am a partner in a software company and a sales and marketing business that I've owned for about 20 years. And as you can tell from just this description, I'm a pretty busy guy. I love the chaos of being an entrepreneur and the challenges it brings and all the problem solving opportunities. And so that background leads us to where we are today with our plantation story.
That's awesome. Well, let's, without further ado, let's dive in. Okay.
Sure.
So first off, let's start off with the very first question I like to ask everybody when it comes to these acquisitions. How did you find it? How did you find this deal? You know, what was the kind of process you went through to actually get this thing to the point of being able to put a contract on it?
Yeah, that's a good question, common question, but and actually I've heard on many different podcasts, we did underwriting or a broker brought it to us. It was a pocket deal, but this was kind of unique. So I joined a mentor program with Michael Blanc, and I joined his program because I wanted bumpers just for safety. Now I had done a lot of real estate transactions, but wasn't quite sure about the, $5, $10, $20 million acquisitions, and just thought, I want a little extra safety blanket. And I've had mentors throughout my life and know that there's a lot of value in them. So I had brought his program on, but ironically, it wasn't actually the mentor program that got me the deal. It was being in his network and in that circle of influence. So I'm on the Slack channel one day, and this gentleman reaches out. It was a Saturday night and says, "Hey, I've got this deal and I could use some help." I reached out to him, and the next morning I was on my way to the gym. We synced up on the phone, and he starts telling me about this deal. And I was literally only 2 weeks into this program with them and was just actively networking. I was really aggressive on just getting out there and throwing buzzwords out and things that I'd read and learned in books, and was just really active. So a lot of people were noticing me. And when he and I synced up, he said, "Yeah, I noticed you in the Slack channel. You're in there quite a bit." So we got to know each other. And about 2 weeks later, I flew out to this property that he had under contract. The challenge, so how I found it really was just being active and paying attention to people posting. This happened to be in a Slack channel, but that's no different than a Facebook group you might be in, or even just in your circles of influence as you're talking to people and letting them know that you're in the business. They say that a lot. You really got to tell everybody what you're doing, because you never know when someone might want to come along and invest with you, or might even throw a deal your way. So that's how the deal came to me. It's kind of a dynamic, interesting story how it all ended up working out 11 months later, but that's how I found the deal.
Awesome. And so you reached out to this gentleman. Did he already have it under contract, or was it a deal that he was just looking at?
Yeah, that's interesting, because I didn't really know. He said, "I have it under contract." And what was interesting is once I landed there, and a few more of the puzzle pieces came together, we had a couple other folks who were going to be partners. The whole story came into picture. So basically, and I'd love to give a shout out to those guys. They're not on the deal today, but they had a lot to do with the original find. And it was Andy Entel and Brent Edens. And Brent had underwritten the deal originally, and Andy found the deal through like a third-party broker of some sort. But when we all met up, I realized, okay, so one person put earnest money. The guy I synced up with actually found the deal through like a third-party finder type person who just sort of sourced it and then
like a
got
wholesaler?
it. Yeah, kind of like a wholesaler, really of just a middle person who caught wind of it from a selling broker, who then somehow had another broker. So there's 3 brokers basically involved in this deal somehow. And the individual I talked to in the very beginning actually isn't the one who put the earnest money down and had it locked up under contract. And at that time, there wasn't really a sponsor quite yet either. So it was kind of a fluid deal, if you will, at that time.
Yeah. And so what kind of role did you see that you could fill with that particular deal?
Well, when I landed, just being a sales and marketing guy, I was fairly confident that I could do that I could handle the raise, which was at that time estimated to be around $2 million. Again, this was right on the ground the first time we met. That was back in early November, and literally we just closed, like I think on was it September 15th we just closed. So long time ago. And I thought my role would be the capital raiser, and then I could do some of the asset management or investor relations stuff. That's where I saw my value.
Mm-hmm. And so at the point that you entered this particular deal, did you have to kind of go through different kind of rounds of offers with this, or was the purchase price pretty much already kind of set in stone?
Yeah, it was set in stone. And what's funny is I spent about 6 hours on the ground. I flew in from Washington State across the country. And I'd been there from the morning, and I'd spent about 6 hours there. And by the time I had finished, I realized when I was flying out that evening was the deal was a $5.2 million offering. There was no formal offering packet. There was nothing you'd normally see. T12s, P&Ls, nice presentation all dolled up. There was none of that. And that they had negotiated down to 4.866, and it was under contract at 4.866. And at that time, that's all I knew, other than the rents were $550 a month, and that it was estimated that the average comps were at a minimum 785, but beyond a mile and a half, the majority of the comps went up to like 900 plus. So that sparked my interest, was the really low rents, and then also what seemed to be a fairly decent purchase price, but I hadn't completely underwritten the deal yet.
Mm-hmm. So what was the major upside potential for this property? Because obviously buying this at, roughly 43.5 a door, somewhere around in there at that, 4.866 million, what was the potential kind of upside for it? And not only necessarily just the upside, what was the business plan to really get it to the point of, to add some value to this, to be able to kind of turn it, I'm assuming probably in a, 3 to 5 year hold time frame?
Yeah. Initially, when we hit the ground and I started, crunching some numbers, I had my laptop up. I had already started working with, some of the analyzer tools to see, where the value add opportunities were. And immediately it was, well, if we're $200, $300 below average comps as far as rents go, I'm thinking we're going to go in there and we're going to bring the value of the units up by putting in, $4,000, $6,000, $8,000 a unit. That was the initial thought, was we'll renovate the units, old school Class C value add, and then we'll raise the rents as we go. But the more I dove into the deal, I realized it was going to be a little more dynamic. This seller was in her 80s. Her husband, unfortunately, had passed away suddenly about 4 months before. She wanted to exit. She owns other strip malls and things, and owned it from day one. They built it. And there was a lot of deferred maintenance I would find later. And originally we had about $1 million CapEx budget on this 4.8 purchase price. But that whole thing dramatically changed as I began to underwrite throughout the next 10 months. And it was in and out of contract and a bunch of other stuff. But the initial was, let's raise rents, let's renovate, and we'll clean up the exterior. And just alone on the really low rents, we should be able to bring home a nice return for the investors.
So let's talk about some of the things that you found, because it sounds like there might have been some interesting things that you found during this due diligence process.
Yeah. So it's funny. So I was flying out that night, and one of the gentlemen who was originally in the deal was in the car with me, and he said, I live in the area, and I'm convinced that even though I may not, for whatever reason, he just wasn't sure if he wanted to stick it out. And he had said that if anyone's going to close this deal, you're going to be the one to close it. And I thought that was really interesting, because not only did I fly in from across the country, but I'd never met this guy. The reason he said that to me is because I'm so diligent on my numbers, and I knew so much about the market. And I had not been on this deal very long, but I spent tremendous time just digging into all the construction projects and the average income. And I mean, there was just a ton of stats I was throwing out at him. And it's funny because I left there really optimistic, and I thought, wow, this is great. And as I got home and really started diving in, and then having contractors go out there and look at things, we realized, wow, there's quite a bit of deferred maintenance. The owner has literally no records. Like, they wouldn't really provide bank statements. They wouldn't really provide any sort of digital records, no T12s, no formal P&Ls. There was just so much gray area. I could see a diamond in the rough, but I knew it was going to be extremely challenging to make this thing happen, especially since I felt like at that time I was the one person on the team that would have the freedom, because I own my own businesses and I have the flexibility to work late at night, no children to work with and whatnot, so I have a little extra time. That was going to have to be the one to take the lead on this thing and dig in. And again, that presented some challenges because I wasn't the lead on the deal. So
how did you fix that issue?
Yeah. So, and this kind of dovetails into your first question, which was what were some of the challenges? So as we got about 3 months into the deal, I had been asking, I need T12s, I need P&Ls, I need this, I need that. And the original partner, one of them had been asking the brokers, hey, we need this, we need that, we need this. And this went on for like 3 months. And now we're like into, I don't know, November, December, like we're into late December, and I'm not getting anywhere. And I'm trying to understand, why can't anyone just answer these simple questions? These are very simple questions. Do they not know what a T12 is? And so I asked if I could deal directly with the brokers. They allowed me to do that. I started negotiating directly with the brokers. And remember, we have a buyer broker, a seller broker, and a third-party person somehow who was in this deal. Okay. So I'm communicating with our buyer broker, which I didn't know in the beginning we even had. He's trying to communicate with the seller broker. They're both in their late 60s, 70s, and kind of sort of semi-retired. So I'm just not getting that like high energy vibe. Like, hey, yeah, man, I went down there and I got a T12, right? It's just like, oh yeah, no, we've been asking. So I was getting frustrated because I'm like, well, if I'm going to make this deal work, I need some numbers. The lenders aren't going to deal. They're not going to take my word for it. Right. You know how it is.
Mm-hmm.
So what ended up happening is I started dealing with the broker directly. The deal started getting a little squirrely because as I dug more in and tried to get more numbers, the more they pulled back. And I thought, well, maybe they're hiding something. I don't know, right? And I come to find out it's the son who's come in to help manage the property. The mother's kind of taken a step back and I have to deal directly with him. Well, he doesn't know anything about commercial real estate. And so much so that for 3 months we were asking about T12s. And what's funny is this deal actually shortly thereafter fell out of contract because the original guy pulled his earnest money out. And I asked him if I could step in and put my earnest money in and take over the deal. He said yes. So I did that. I wrote a new purchase and sale and a new offering. They wouldn't sign my offering memorandum. Then they made me sign a confidentiality agreement with the broker, which was interesting. And they wouldn't sign my offering. And I said, well, do you want to sell the property? Yeah, but we're not signing it. Okay. Then the purchase and sale, we went on for like 2 months and they wouldn't sign that either. And I was going to give them the original asking price that was negotiated at 4,866. So basically this deal actually fell out of contract, not only because we couldn't get anyone to give us anything that we needed, but they wouldn't sign the purchase and sale agreement. And I got to a point where it was out of contract. I kept trying to fight to get it back into contract. It died. And that's where the original guys just sort of fell off and I left it. Well, the seller reached back out to the broker and said, I want to come back to the table with these guys. And he asked for me because I had been the one that had been communicating with the broker for whatever reason. So he and I start working together, the seller and I, somehow through the brokers, and they kind of step back a little. And that's when I really started understanding this deal. And I can't understate how much you have to be a really good problem solver, but you also have to reinvent the box when you're dealing with these deals sometimes. Don't just think or assume that everyone understands your position or that the brokers are going to be able to make a deal fly. They're in there to make their commission and do their thing, and they're going to move on to the next deal if they can't get this thing closed in a reasonable amount of time. And I realized that it's the seller. He's just naive. He doesn't understand. So when I got on the phone with him, I said, do you know what a T12 is? He's like, no, I don't know what a T12 is. I said, well, has the broker explained to you that we have to have that? No. I go, let me get you one. I built a spreadsheet. I sent him a sample and he's like, okay. And I go, this is basically a glorified P&L. Do you know what a P&L is? Yeah, I know what that is. Do you have one? No. Okay. Can you go to your CPA and just take all the documents you have and just have them put something together? Yeah, I could do that. Okay, great. And that's how it kind of started. And we ended up getting back under contract. Almost back under contract, but then COVID jumped in. And that's a whole nother story, which I'd love to dive into.
So I have to ask you, Chris. So like, if I was in the middle of that, I'd probably be one of those other guys and go, I'm out, raising my hands up saying, I give up. What was it that continued to make you drive forward and kind of move forward to pursue this particular deal?
Yeah. Well, I'm not stupid, so I don't waste my time, right, on just things that will never come to fruition. But I am a fighter, and throughout my entire life, I've gone through a lot of challenges as a young person, and throughout my entire life, where I have found the opportunities is where everybody runs. It's really where nobody wants to be, and I'm one of those guys who I'll run as fast as I possibly can to see how fast I can actually run to challenge myself. Not run as fast as I can to get to the finish line or to just qualify. That's my mindset. And when I saw this deal, I thought, wait a minute, $550 a month rent, owner operator, original owner, right? I thought comps were selling at 6, 5, 7 mil, similar comps. I thought if I could get this thing down to X, I can make it work. So all along, I never thought I would buy this building at 4.866. And that was another little point of contention because everyone in this deal told me, you can't negotiate another dollar off this deal. There's no way she's going to go down, this, that. Everybody exhausted that. I kept asking, no, wait a minute. And until I got in charge of it, did I actually realize how much I could actually negotiate. So the point is, I guess, is I saw something and it was in the data. The data was driving me to push forward. I just had to find the right price to make it work. Does that make sense?
Yeah, that does make sense. So at this point, before COVID, 4.866 is where you got it under contract again with yourself, right?
Yeah.
And now COVID hit. Now what happens?
Yeah. So COVID is coming and I come back to them and I said, I've got to get a lower price. Let me take this back for a second. So we're at 4.866 and I got them down to 4.2 right before COVID. So I got them to sign the PSA at 4.2 before COVID.
That's a pretty significant jump.
It was. And I thought I could make that work. And here's what happened. So COVID hits, but I didn't get this. I got a verbal commit at 4.2, but they didn't sign. Okay. I drew up an offering memorandum, if you will, and sent that over. And he initialed it, but he wouldn't sign the PSA yet. Okay. So he signs it and we're sitting there. Well, all of a sudden COVID comes along and another guy comes in somewhere, a gentleman comes in and he ends up taking them to dinner, violating the broker code or whatever, and just starts to blow this deal up a little bit. Right now, this is like I don't even know. It's around COVID time. March, April-ish or so. And then now all of a sudden I've got competition because it was an off-market deal. So I came back to them and I said, look, if you're not going to sign the PSA, I'm walking. But at this point I had shown them and my sponsor, we both shared financials. So they knew we personally could close this deal. They knew we could get it to the finish line and we had experience and stuff. I didn't have as much multifamily, but my sponsor did. And so they started hemming and hawing, and where we ended up at was, I said to them, now that COVID's here with all these issues, I need to be at 3,400,000. I can't even come to the 4.2. There's just no way. And they said, well, we've got a group that's going to come in at 4.1. And I said, well, you might want to take that then, but you're going to have to start all over because I just spent 7 months or 6 months working all these manual numbers. It's going to be very difficult for you. Right. And they may fall out when they start finding things. So fast forward, they came to us and said, we felt you could close. You put a lot of time in. And we ended up settling with a PSA signed at 3,900,000. But remind me later to tell you about this little clause I put in the contract that got us a bonus at the end.
I'm making a note of that right now.
It's good.
So originally 4.866, actually originally it was 5.2 was what the original kind of offer was. Not offer, but the asking was. Then you got it for 4.86. Verbal at 4.2 pre-COVID, right before COVID, and in the middle of COVID, was able to get it down to 3.9. And what did that do for you from a return standpoint when it came to looking at the, I haven't even asked you this yet. Are you bringing on investors with this, or is this just going to be your own personal deal?
No, it's a full syndication. And we had planned on doing that all along, but the underwriting changed dramatically. Not only when COVID hit, but when all the lender standards tightened. Mm-hmm. So, yeah.
So what did the financing look like on this deal? Because obviously, like you said, with no documentation and paperwork, and you're having to piecemeal it all together, it's a lot harder for lenders to wrap their minds around that.
Yes. So we originally were sourcing bridge and agency because here's the thing. Get this, they had an occupancy, they said they had an occupancy of like 98%, right? And again, I was hanging my hat on that because when we went to the building, it appeared that I went there and I parked at night. I mean, I spent a lot of time there. So I could tell that it was pretty heavily occupied. I thought, well, at 550, why wouldn't it be, right? So I was thinking, well, we could possibly secure agency debt because it's got 98% occupancy as long as people are kind of paying, right? And so when we got into this COVID situation, we actually ended up securing agency debt because bridge just got a little too expensive. And we might have had some options if bridge was a little more reasonable, but even with agency and all the reserves, because I got the price down, and that's critical because this deal would have never worked at 4.8. Even with bridge, it didn't pencil. I knew I could probably make it work at 4.2, but at 3.9, it made it work a bunch of different ways. And what I mean by that is when I did my offering memorandum, I had really 3 different plans. It was like, hey, we can throw some lipstick on it. We can clean up the outside, maybe throw a carpet in a few units and paint, and literally just raise the rents to like $650 and turn around and make a bunch of money for everybody, right? Then I thought, well, there's a middle ground. Maybe we take half the units and renovate them at $55,000, $6,000 a pop because it's fairly inexpensive to renovate down in Georgia when compared to like, Seattle or whatever. And then the other one was raise more, like say $1 million, $1.2 million, and completely renovate everything because we figured, it was like $5,500 a unit at like 112 units was going to be like $700,000 plus $300,000 for exteriors or something. So I had like 3 plays I could go with as long as my agency stuck with what I thought we could get. So what was great about getting the lower price was it opened up a world of opportunities for us in worst case scenarios, I guess, if that makes sense.
So at what point did you decide on the lender for this project?
Yeah. So again, working with my main sponsor who had Freddie debt, and, he had 7, 8 buildings under his belt, really was just, he said he could run the asset management as well if needed, but he had that experience. We shopped Fannie and Freddie, and we ended up going with Freddie with a step down. I think exit at year 6 would be like a 2%, I think, step down on that with a $3 million loan. And we had reserves, and I can go into detail on that, but it was between Fannie and Freddie really. And we ended up with Freddie.
Okay. And at what point did you end up rate locking? Because I'm assuming if you waited until September, you probably got a much better rate than you probably originally were thinking or underwriting for.
Yeah, that's a great question. And this deal was so crazy. I mean, I could go on and on about it, but we getting documents at the last minute. Here's another thing. I didn't want to rate lock until I was sure not only everyone was living in these units, but I had some financials from him. So I flew out there like right before rate lock, and I said to him, I need to see as many financials as you have. And I sat there for 10 hours in his dirty office and analyzed and scanned hundreds and hundreds of documents just to visually confirm that his tenant logs were accurate and all of his rent receipts and things like that, because everything was manual, piles of stuff. And then also to go and visually inspect my own. I think I inspected 96 units or so on my own during this COVID crisis, which was insane as well. Face shields and masks and gloves, and it was wild. Because my partners couldn't go there because they would be quarantined for 2 weeks if they went. And I was the only one that had the flexibility to fly out there. So 4 times I'd been out to that property, even if it was in for a day and back out. It was crazy. So yeah, we secured the numbers, and that's when we rate locked. So we rate locked about, about 75 days before closing. So it was, I think, June-ish, June, July, somewhere we rate locked. And it was at 3.87. We actually got it down through a last minute negotiation, but it was 3.87.
3.87. That's still great. What was your original number for underwriting on that?
Well, again, we played all over the place. Some of the numbers that I have now obviously have dramatically changed, but we had underwritten originally at like 5.25. And then we started shuffling things around as reserves came in. And as we found there were, other places we were putting money, we moved it down, and then we finalized it and locked it up. And now we finished the deal at 3.83. 3. So we got 4 bips off a last minute negotiation with them.
Mm-hmm. So what did you end up raising on the deal as a whole from your investors?
2.130.
And obviously that's going towards initial down payment, closing costs, acquisition fees, and other upfront fees, and then also going towards the CapEx or the renovation. So I'm assuming Freddie did not do a future funded CapEx. Am I correct?
Correct. And I believe a lot of that helped expedite this process because, as you said, manual deal, you can only imagine the literally like what seemed like daily back and forth reconciling with this seller, directly text messaging, emailing, and then updating all these docs for Freddie. And we didn't want to give them any reasons to bail out on this deal because we'd heard horror stories and we were worried about that. Like as COVID progressed, and Dan, I'll tell you, about 4 days before closing, they did pull some stuff from us and they put us in a slight bind. And that's where those last minute negotiations came in, which I'll talk about. But yeah, it was a challenge.
Now, these are last minute negotiations with the lender?
Lender broker, but lender. But you know how it is. Like you're trusting your lender broker. Obviously, you're not really necessarily dealing with Freddie right on the phone. Mm-hmm. And so the long and short of that is, literally 4 days before, they came back with, we want another $100 and some odd $1,000 for roof reserves because of some fourth revision on an engineer's report, which we had never seen in the first place. And then so there's another $110,000 they want or so. And then they also came in and said, we're taking 1 year of your IO. And you know how that is. A year of IO in this deal was $50,000 in income, basically, right? Or cash flow, I guess. And so with the additional reserves and the IO being taken, it just started to get a little dicey about literally 4 days before closing.
So let's talk about some of these reserves. I mean, obviously those are some reserves that you're talking about there, but I'm sure there's also some additional operating reserves that maybe you raised on top of everything to be able to have some extra cushion there just in case. And also talk a little bit about that IO reserve, because I know on a lot of our acquisitions, we do have that COVID reserve is what people are calling it, that the lenders are requiring. And it's usually 9 to 12 months. We've been able to negotiate down to 9 months on one of our acquisitions. But they not only wanted just the interest for 9 months, they wanted the full principal and payment for 9 months.
Yes. If you're not paying close attention to all of that, you can really get bit. You're absolutely right. And also even the brokers, they'll say things sometimes. We had great brokers, but they'll say things and then, oh no, wait a minute, Freddie came back, and you don't know if they miss a step or if it's just Freddie changing their mind. They can do anything they want. So we ended up actually putting down about $165,000, and that was 12 months of interest, principal and interest. So 12 months there. Then we ended up with 12 months worth of insurance. And then we ended up with, I believe, like 4 months worth of taxes was the way it broke down. Then we had $125,000 in additional reserves for roofs and some ADA access stuff like GFCIs, a couple other little things that they wanted us to do, which again, they can do, but they allowed us to do those things after we closed. So that was another 120. We took 100,000 in just startup capital and reserved that off to the side. And then we also had about, I want to say 625 or 650,000 in CapEx as well, which while that is for CapEx, it's still cash that's in your bank versus relying on the lender to get it, right? So it's kind of nice to have all of that, knowing that in 12 months or so, we'll get most of these reserves back.
The hard part is sticking that 600 and something thousand that's in, CapEx into an account that's earning 0.01% while you're spending it over the next 12 months. But
absolutely. Yeah, for sure.
So let's talk more about the physical due diligence. What are some additional things? You already mentioned kind of the roofs that were going to have to be, repaired. What are some of the additional things that maybe are caught during that physical due diligence period?
Yeah, we found that there was a couple of maybe 6, 8 leaks from the bathroom on the second floor down into the living room. And it was just an elbow, but you could tell that they had somebody that just went in and fixed it and threw some putty up. They didn't do it correctly with the spray and the stucco. Yeah, you can tell it's just a random job from somebody who probably lives there. Yeah, and there was probably 10 of those. And I thought, okay, well, I'm assuming all of those are going to have to be replaced because they probably had a shoddy handyman that was doing it. So I earmarked that. We had a handful of glass doors. There's a little security issue on the back of the building with another apartment complex, kids coming through. The fence had been torn open. So we knew we'd have to secure that fence and fortify it. And then we're going to put a full security system in. There was driveway work that, was a little more extensive, but what was great is as we worked through the process, it took so long, I was able to negotiate with the seller to actually fix some of the more expensive stuff. Like one line had a blockage in it. They cut the concrete out and replaced it. It was $5,000. There were 2 manholes that needed to be repaired. But so little things like that popped up as we really got to diving in. We didn't have any major rodent issues. A lot of deferred stuff like glass panes, maybe some flooring that was coming up. The GFCI thing was a surprise. Freddie required that. So even though in 1983 we're grandfathered in, the city, I even met with, actually, this is crazy. I actually had an opportunity to meet with the city council members and the chief of police and a few other officials there. And twice I flew in. They wanted to meet with us and talk with us about our plans, and they want to help us. And it was great for me to be able to do that and become a staple in the community and turn a building around, because they said these owners just really let things go for so long. But yeah, we found a lot of little things, but we built it into the CapEx. I think I earmarked like $50,000 just for smaller deferred maintenance. I had earmarked like $140,000 for roofs alone. And we got a price. We negotiated already down from like $6,500 a roof down to $5,200 to give them all the roofs. So we've already been really aggressive on negotiating. And I think we're going to come in under budget on all our CapEx items.
That's great. So still the plan is to do 50% of the units, right?
Yeah, we're still up in the air. We're going to actually, Dan, we're going to test it. So we had a unit up above the manager's quarters, which was a duplex. So there's 29 buildings. The 29th one is a manager's unit. And above it was an apartment that was not on record. So we're going to fully renovate that. And we're going to try to throw it on the market for, say, $750 and just see what we get. Because right now the rents are $550, right? And if we can get $750 out of that unit, well, then it'll give us an idea of, what the demand is. Because in the building, there's 5 units that are already paying $650. And the rest of them are paying $550. So we thought, well, our challenge with this value add and hitting our P&L is how many units can you turn to get your 12-month, marker, right? And how high do you bring them? Do you bring them to 6, 6.25, 7 without doing really many renovations because the rents are so low? Well, we probably could, because I didn't even tell you this, Dan. We have a waiting list of 22 people that have already paid $200 deposits just to get in line to get in there. And I believe a lot of that is because the rents are $550. But it's like, think about it. If you go out, you don't really have anywhere else to go in that market that you can get anything under about $785. There's one building, they're smaller, no pets. It's an old military installation like housing. It's not favorable. That's why we have 22 people in line. So we have all these ways that we can chop this thing up, and we're just going to test it. We're going to fix a few units with carpet and paint. We're going to renovate that one apartment, put it on the market, and we're going to slow roll some of the existing tenants. We've already been testing that with them. Management's on the ground. They've been asking tenants like, well, could you handle a $650 bump, because we're going to be raising. And another thing, Dan, I didn't tell you, was all the leases are 30-day leases. Right?
Wow.
So we have the opportunity and flexibility to do a lot there. And the reason I met with city council is because I wanted to understand the community and to let them know what we were doing, so that if they got any calls, they would understand that we're in there to turn this property around, and we're not going to gouge people, but we have to put a lot of money in, bring up the value of the property and bring those rents up so that we're all on the same page. And so even the council member has been talking to some of those tenants and just, letting them know that we're here to make a difference in the community. I mean, again, there's so much to this deal. I can't even unpack it all. It's really cool. It's really cool.
So how did you end up structuring this deal with investors?
So our returns for investors, and it had shifted a little. This is a heavy value add play. And I with COVID and going up against some of the other syndicators that offer, preferred returns, which is fabulous. This isn't a class A. This is a class C value add. And oftentimes, as you know, you're in for the long haul. You're in for the equity play at the end. And that's usually where you get a nice 2.2, 2.3 equity multiple if it's a heavy lift, but you might not get anything for a couple of years. I wanted somewhat of a hybrid. And so what we did is we pretty much guaranteed, basically saying we won't pay ourselves until you get at least 6%, but it's not a true preferred return because there's just not enough in the deal for that. So we're really saying, hey, first quarter of acquisition, so let's say in this example, January of next year or so, you'll get a 6% that you can bank on. And when you exit in 6 years, what you're going to end up with is pretty much a for sure 6% throughout the years. And then you're going to have an overall of somewhere between a 2.1 and a 2.2 equity multiple, and north of 21% annual returns is what we penciled. And that was without the additional income of the apartment, potential storage unit, pet fees. So there's a lot of flexibility in this deal.
So when you had no preferred return, but you still kind of protected that 6%, if you will, how did you split the equity with the investors? Was it 70-30, 80-20? How did you structure that?
Yeah, we did a 70-30. And one other thing I didn't mention was on the 6%, we said, if it's greater than 6%, let's say in first quarter, we realized we raised rents well and we executed our plan, we will do a 70-30 split. So our CPAs are already on board and they're analyzing data as we roll, and we'll analyze it each quarter. And if we actually have a higher than 6, we'll go ahead and give it to them. I mean, we could bank it and do it at the end of the year or something, but we also had that in there. So they knew, okay, I'm getting 6, but could be a little higher.
Mm-hmm. No, that's great. That's great. So I know we had originally talked about this $3.9 million price. You mentioned that, special clause that you put in. So let's dive into that little clause that you put in and kind of, how much of an additional discount did you get off of that, final 3.9?
Yeah, Dan, I got to tell you, I love negotiating. It's just fun, the challenge of it all. But this was a tough negotiation. This seller would beat me up on like a $50 item. Like we would go round and round. Now, remember, I'm dealing directly with the seller at this point. The brokers literally said, is there anything we can do to help you? They felt guilty because for months, they would be in on a phone call maybe. But other than that, it was me and the seller almost like 3 times a week, right? And so at this point, he and I are negotiating back and forth. And it got pretty heated the last day of my trip when I was there the last time. I had to call him out on some things, and it was really interesting, but that's what happens when you have these deals, and which is why brokers oftentimes don't want you meeting face-to-face. So one of the things I put in, because being a seller, a private seller, and knowing they have no books, I wanted to protect the investors and us once we locked the rate. Now, we didn't have any money hard. We were able to have a 60-day due diligence period with 1 extension. The only thing I had to do was put an additional $25,000. Original was $50 in earnest, an additional $25,000 to get an extension if I wanted. And there's a weird clause in there that I had to fight with him about, but I basically said, I'll give you $15,000 hard of my additional 25 if you just give me this extension without the lender letter, because it was this weird clause his attorney put in there. He did, so we had the extension. But before we went under contract, this was in the purchase and sale agreement, and I'd love to share this with you after so you can see what we put in there. It's this little clause. It says that beyond 12 units, be it vacant or late, we get X amount of dollars as a credit off purchase price. So, and it's the month before closing. I'll give you the example. Let's say August. We're closing in September. And in August, as of the 15th of the month, he has 20 units that have either not paid or are vacant. We get $3,300 per unit for that beyond 12. Does that make sense?
Mm-hmm.
So what it ended up being was potentially up to $50,000, $75,000 in credits if he didn't do his job the last 30 days and bring this thing home, because I didn't know how Freddie would react as we got into the home stretch. And if the closing got stretched beyond the 5th, they could ask me for September's numbers, let's say. So I had to stay on top of this stuff with him. And I'm so glad I did, because we did really, really well until the very end. And I noticed that he just got a little lazy in his collections. What I could see in the history, because I had 13 months of history that I had to type into these spreadsheets and have him certify, was that he actually eventually collects the rent from pretty much everybody. He only had like 1.5 evictions on average a month, which was astonishing to me in that market. But I just had a feeling he was going to get lazy because he said to me, you know, I'm retired and I just want this thing to be over. And so we ended up getting an additional $25,000 off at the very end, which was about 45 rents, if you want to think of it that way. It wasn't that many, right? But it was equal to that, right? 3,300 per unit that was either late or vacant. And he even tried to fight it with his attorney. And then when I brought back the clause, because it was ironclad, we even gave an example in there of what it would look like exactly. He conformed and didn't bring it up again. And it was great because we got another $25,000.
Yeah, no, that's great. That's a great idea. That's a great little extra clause you can stick in there to kind of, mitigate some of that downside risk as you get to closing, especially with a smaller mom and pop operator like that. You know, they can sometimes neglect collections, but also even just neglect evicting somebody when they need to be evicted, and also, being able to maintain that occupancy during that entire process up until closing.
Well, think about this, Dan. I mean, with COVID, right? We none of it's new. We're treading new ground here, right? So I thought, what happens if COVID gets worse or something goes on? Well, what if he can't evict, or what if he just decides not to evict, or whatever? We have to protect the investors because we're locked in at that point, right? And so, anyways, I mean, you know the deal. You're an experienced investor in multifamily syndicators. So, but anyways, it was a great clause. It got us a little extra chunk of change. So we settled at 3,875, and I also got him to replace 2 roofs for me at the very last minute, and put in escrow all the glass door replacements that had cracks or were broken. So we had a handful of really good last minute negotiations.
So how long did it take you to secure the capital from your investors?
Let's see, it took us about, I'd say maybe 4 weeks to raise, 3.5 weeks to raise. We didn't find that it was really challenging to raise, but we don't have dozens of deals under our belt. And so we obviously, per the SEC, weren't going to just bring in a capital raiser, right? We had our partners and we were settled on that. But it took us probably about 3.5 weeks. And what was funny is as we got to the end, where I thought maybe, oh boy, it's getting a little close. We had time actually. And the operators, myself and the other partners, we actually had capital that we could deploy if we had to, as any sophisticated, or I guess, savvy syndicator would have some emergency reserves, right? But I actually had 5 people at the very end that came in right at the last minute, and I had to turn them away, which was pretty cool.
Yeah, no, it's always good when you can turn them away, because you want them to also realize that when there is a deal, make sure you jump in early and not wait to the last minute, because a lot of times when those deals fill up and they get in, they can't get in, it just creates urgency on that next deal that you actually do as well.
Yeah, and if I may, for your listeners, it's interesting. I've heard lots of stats as it relates to capital raising. If you have a big fund person on your team, or if you've been in the business a long time, a little different if you have a big marketing platform. But when you're in this space and you've only got a few buildings under your belt, you want to anticipate, let's say 40-50% of those initial soft commits backing out. We've been very fortunate in our first handful of deals. We've done 230 units, I think, between the 2 larger deals we've done just this year during COVID in the last 6 months. And of those deals, we've only had an average of about 26% of the folks drop out after soft commit, which we thought was pretty good. But you want to anticipate that, because especially now with COVID and the unknowns and things of that sort, you want to make sure you protect yourself and you're ready for the close. You cannot fail at the last minute. You'll completely lose your credibility.
Well, and one other kind of tidbit I'd throw in here as well for the listener, Chris, is we actually keep track of, just like you are keeping track of, those people that soft commit and then back out. And we actually tell our investors that we actually have a 3 strike you're out rule, where if you actually soft commit 3 times in a row, now I can understand if somebody does it once and then invest in 2 or 3 deals and then they do it again or something like that. I'm not worried about that. But if it's 3 times in a row, they soft commit and back out, soft commit and back out, we just remove them from our investor list, and we just tell them, hey, I don't feel like we're the right fit for you. You obviously don't feel like we're the right fit for you. So let's stop wasting each other's time. We're going to remove you from our list. And investors respect that. I mean, I definitely want them to be able to review the deal, but if they review 3 deals in a row and they've soft committed and they back out, something's off, right? And so there's no sense of trying to waste each other's time. Yeah.
I tell you, Dan, what I attribute my success to on this deal is I was previously an entrepreneur and business person, which I am today still, and I'm really used to the chaos. I love taking massive challenges and just solving the problems. I just love digging in and just working 20 hours a day until it's solved. And that boded well in this deal, because had I not had that mindset and that experience that, hey, I can push through this, I have to solve the problems and opportunities here, I would have never made it. And to your point, we're very diligent on all of our tracking. I mean, we track everything, like when people are clicking things, when they're going places, when they call us, did they commit? Did they not commit? As a matter of fact, another interesting statistic, Dan, on the first two deals, the majority of the investors that I had personally, because I brought 1.1 million of the 2.1 million on my own. Every one of my investors, every one of my investors off my first large deal during COVID that came in on my second deal, each one of them, both times, actually raised their commitment level, which is really interesting because that's not a stat that's normally measured. Like, oh, they put 100 in and, hey, would you like to go up to 125 or would you like to go to 150? Well, yeah, the deal does look good. I can do 150. And that just really surprised me, that just by having conversations with some of these folks, they all wanted to get in more. And that added a lot of additional revenue at the last minute, which was pretty cool.
So two final questions to kind of wrap up today, and they're contrasting questions. I ask them with everybody towards the end. Is first off, what did you find that was easiest or easier during this entire process that maybe in the beginning you thought was going to be a little bit more challenging?
Yeah, I would say probably the systems and processes, while each one is individually challenging. Let's say your investor relations process. That can be a challenge. But if you automate things and you buy the right software and you have the right team members, you can systematize and create a better flow. And I think that was critical to my success, is having, my partner in Sterling Rhino. I brought him on as a partner after I founded the company. His name is Paul Wilcox. Guy's phenomenal engineer by trade. He took the lead on a lot of that automation and signings and things. So having the right players made it a lot easier. So I would say just the systems and the flow of things went easier than I thought it would from a systems and analytical perspective. Obviously, there were challenges in the sale and the deal itself, but the structure of the syndication actually went fairly smooth.
So last question here is opposite of that. What did you find was harder than expected that maybe originally you might have thought was going to be a little bit easier?
Wow. I wish you had another show for that answer. But here's what I would give you this as the number one thing was, one, figuring out in a more timely fashion that I could have just dealt with the seller and got this thing to the finish line, because I'm a people person, and throughout my trade, throughout my life, I've been a pretty good problem solver, and it's like a win-win for everybody, right? And so if you could just get to the person and understand them, which that's what it took. Me getting to the seller and understanding him. The broker literally told me, said, there's no way we would close this thing without you dealing directly with him, because nobody could get on the same page. It's like they were speaking different languages. No offense to them. It just is what it is. So I would say that the biggest challenge was figuring out and identifying in this tornado, how do I solve this problem efficiently, right? While you're locking rates and you got COVID and all these other things. And it boiled down to just getting very efficient at my communication and very direct and saying things to people maybe that wasn't comfortable. But at the end of the day, it got us to the finish line, and I earned the respect of not only the brokers, but my partners and the seller as well. So that was definitely the biggest challenge, was identifying that communication gap and then closing in and measuring and manually tracking all those documents. Wow.
Well, Chris, it sounds like this is a phenomenal deal. It's going to be a phenomenal deal for you, but it's also a phenomenal deal for your investors. As we finish up the call today and on this podcast, can you tell the listeners a little bit about how they can reach out to you if they have further questions about this deal or maybe some of the future things that you're working on?
Yeah, absolutely, Dan. Well, first of all, I love sharing just anything with people that want to learn. I really love helping people. I've had a lot of good mentors in my life and built everything I have out of nothing. And so I know it adds a lot of value to people's lives when you're willing to share. Obviously, we're all busy. So you can email me at chris@sterlingrhinocapital.com, or you can reach out to us on our website at sterlingrhinocapital.com. You can also reach me at Investor Think Tank on Facebook. We also have Instagram, Sterling Rhino Capital 1. And there's tons of other places. We've got a great retirement calculator that compares the stock market on our website. And then you can download like our syndication guides and things like that. But any of the think tanks, man, I'm all over the place. Again, I love adding value and just sharing as much as I can to help. One last thing, if you don't mind, is I've got a book behind me that I wrote, and I donate 100% of those proceeds to charity. It all goes to Feeding America. And we've fed almost 118,000 people so far with a goal of feeding 1 million people. And Tony Robbins matches every dollar that we donate through that enterprise partnership with Feeding America. So if you're looking for a good book for your kids about how to get through a lot of adversity and overcome challenges in life, You've Earned It, How I Refused Anything Less Than Success, and You Can Too, is a book I wrote about just overcoming adversity. And it's been well received.
That's awesome. Well, Chris, I appreciate having you on the podcast here today. Looking forward to continuing to follow you and have you on one of our future episodes as you continue to close more deals.
Thanks a lot, Dan. I hope I add value to your audience. And if you ever need anything, man, please reach out. I'd love to help.
I certainly will. Thank you, Chris.